Hey folks, Bill and Brian here with Energy Road. We're talking about a hot subject. Are we running out of oil? Brian, roll the logo.
Okay.
Hey folks, we're going to check today, see if we're running out of oil. Brian, do you know where the dipstick is for this checking this oil?
No,
All
but
the
I
all the
I'm
dipsticks is in Washington D.C. I forgot
I'm
to tell you
beginning
that.
to wonder, and we're probably going to allocate. How long do you think, Bill? Maybe 30 minutes? How
Oh,
long?
we'll go till we feel like that we're boring each other. So
Okay. So we're gonna target about 30 minutes, and what we're gonna talk about is this kind of spurred a conversation where demand globally has been increasing, and we have some charts we're gonna dive into that are gonna cover that. And really, what we're trying to question is, as demand is continuing to grow organically, do we have sustainability on production to meet that? And we're going to touch on exporting countries and what that means as far as we see crude oil growth and crude oil demand moderation in advanced economies like the United States. There's some projecting that oil demand is going to drop off the table. We don't see that, but that's what we're going to cover. We're going to cover production, demand, and exports internationally, as well as within the United States. Is that kind of
sure,
encapsulated?
I mean we should be able to do
Sure.
that, and we'll probably solve the problem, all the other problems of the world while we're doing that.
So
So, let's take a look
let,
at demand first. So
let's
here's what we're
first,
looking at. And so
yeah,
where's this data coming from, Brian?
this is coming actually from OPEC, and the way that they organized the data was a little cleaner to get to than the Energy Information Administration. So, one quick note: all the charts that you see, these are within the Rogue Edge platform, which is a subscription service that we offer for $89 a month. If you have interest, there's links down below. You can book a meeting with us, email us, or you can just sign up. It's only $89 a month. And this gives you access to 150 charts, interactive and downloadable. All these charts are interactive, so you can highlight particular things of interest. You can click on or off particular data sets. And we also send out our weekly expectation of what the market is going to be. So Jennifer, shout out. Thank you. Thanks so much for stopping in. It's great to see you stopping in. So hopefully your recent trip went well. And listen, if you have any questions along the way, we do try and monitor and keep in touch with the comments. We may not type the response, but we'll try and get back to whatever questions. So, Bill,
So
should we start with
let's start
demand
with
or should
some. Well, no, let's start with the basics. So look at the demand. What's our number on demand?
the number is roughly 100 million barrels a day?
Okay, so show me production.
Let me go to that. Production. Yes.
And how much is it?
72
Oh my
roughly.
God, we're already out of oil.
We solved it. We're going to end right there, right?
So this is something you need to understand when people talk about demand and when they talk about production. So when OPEC shows you demand, and everybody talks about this number being at 100 million barrels a day, it is inclusive of natural gas liquids.
Right.
And so when you talk about strictly crude oil, you have to understand that there's a difference there. And so there are people here that would automatically freak out when they saw that difference.
Yep.
So it's not always apples to apples when you see charts.
For
So what we,
example, in the
so
United States, In
There
the
you go.
United States, just the natural gasoline is close to 1 million barrels a day.
Right. So, so when you see that, and that's world demand that we're seeing at 100 million barrels a day. So that includes all the NGLs of all over the world. So, folks, that's where you have to sort of walk through where people are starting their reference points from.
Well, and a
So,
lot of times you
so
have to understand what the definition is. When people talk about oil demand and oil uh, supply is going to be the production. And on the demand side, are they talking about refining demand? Are they talking about the petroleum products on the other side of the refinery? It's
right.
important to understand what variable you're really discussing. And that's part of the reason we spent yesterday kind of diving into how OPEC define these variables, right?
That's right. We spent almost as much time doing that as looking at the data because we wanted to make sure when we saw that that we knew what they were talking about when they used terms. So let's talk about what we see here, Brian. It looks like it's up and to the right all the way. What's up with that?
Well, first, I always take a look at the time scale, this is looking from 1960 to today. And as expected, you can see this little dip in COVID. But what you can see is back in 1960, we had roughly 20 million barrel a day global demand. And then it rose to 1980 to over 60 million barrels a day. Then in 2003, we crossed over 80. And then roughly another 20 years, we've added another 20 million barrels a day of demand.
So a
Now,
lot of people think this is because the population is growing, and that's part of it. But part of it is the fact that more and more parts of the world are getting access to these products,
right.
and therefore demand is growing. But we just have to remember there's a lot of part of the world still yet today that do not have ready access or especially cheap access to these commodities.
And one of the talking points that we could spend probably hours on is energy poverty. And that means let's take a look at a couple of things real quick when we talk about demand. What is probably the economic powerhouse that everybody is focused on over the last 20 years? China.
China, that's right.
So look at the demand that they increased from and to in the year 2000. So their demand increased to 14 million barrels a day. So
and they are a major importer.
right. And yeah, so they are a major importer, and we'll get to that in a second. But let's add this back in, and by contrast, well, let's keep them both on there. By contrast, you can see how much the Americas, and this includes Canada, Mexico, United States, Chile, and I think Colombia. I'm not sure why, but it's the
Yeah.
OECD definition of the Americas. And I think there's 5 members of that. But let's take a look at that. Now China, let's see, in 2000, China was at 4.7 million barrels a day, and the Americas were roughly 25 million barrels a day. And that's grown to, well, the Americas have remained flat. So evolved or advanced, not evolved, but economies that are mature aren't really growing that much. It's economies that are developing where you're going to see a lot of growth, right?
Right. And the thing is, of course, when you listen to people like Peter Zeihan, you might find that, oh, well, China's not going to always be going up to the right. Nothing's always going to be going up and to the right because you have energy efficiency that takes place. You have lots of different things that take place that slows that demand. And according to Peter Zeihan, China's population will decrease significantly in the next decade. And so, and his significantly is by several 100 million people. So
Yep.
that's pretty significant.
You can see a very similar thing happening in Europe.
Right.
It actually decreased. Let's take a look at Asia Pacific. That actually decreased.
Right.
China obviously increased. What about India? India.
Right.
Now take a look. We're only at 5,000 barrels a day. That can't be right.
So India,
5 million.
Yeah, just
5
under
million
5 million.
barrels.
India
Yeah.
imports about, and more recent numbers are about 4.4 million barrels a day. They have refining capacity of only about 5.3 million barrels a day. And so,
when you look at this is another China waiting to happen.
But they only have 1/3 the refining capacity of the United States, and they have 4 times the amount of people.
Right.
So there's a break coming. I don't know what it's going to be, but they can't meet all their demand by that. And they only have about 500,000 barrels a day of indigenous production.
Yeah.
So they have to import a lot. And so you're going to see some really interesting on the supply side changes in India. I always caution people that, most wars are fought over energy. And so when you take a look at this, that would be interesting. If you want to hear something interesting, you ought to hear Peter Zeihan's take on India and oil supply. But that goes away from our global demand. So the two big demand areas are India, China. One that's really still developing is Africa, both as a production and demand. So,
and if you look at it from 100 million barrels a day of demand, the ones that we just touched on, the Americas, China, India, Africa, that is 50% of the U.S. demand, or not U.S., global demand for crude oil and NGLs. So that includes NGLs as well.
So, and when you look at the per capita, and we don't have a chart for that yet, but when you look at the per capita, their demand would the U.S. demand per capita is so much higher than India or China.
Mm-hmm.
And if they had the same thing as we had, our demand on crude oil would probably be approaching 200 million barrels a day, which of course is unsustainable for production at this point.
Right.
So, so when you start looking at the world, things start to change. We in the U.S. get a very Western viewpoint of this. And that is another whole long discussion. That's at least a 4-beer story.
Many people are projecting for the Americas, and I'm going to say the Americas because I'm going to match up with the charts here, that we're going to continue on this gradual decline on how much demand that we have, very similar to Europe. So that's what people are expecting. But what we're looking at is, the Americas might decline 3 million barrels a day, but in India might increase 10 million barrels a day. So globally, our demand is increasing, and that's the one thing to watch for, as well as the maintenance, or as China continues to advance their infrastructure, because they're still infilling. They've put 50 years of infrastructure in the last 20 years. What took the United States 50 years, they have done in the last 20 years. So as it gets more integrated, is that going to continue? Is it going to steady? Is it going to grow? And so looking at that growth, but when we look at everything, it's up and to the right. And over the last 20 years, we've grown 20 million barrels a day of demand. Right. So as we've grown 20 million barrels a day of demand, what do we see on the production side? Now, on the production side, as Bill said, that includes NGLs. I would probably roughly calculate.
No, the demand side includes
Or demand
NGLs.
side, I'm sorry, demand side included NGLs. So we're starting from a different data point. You have 100 million barrels a day of demand that includes crude oil and natural gas liquids. And this is production of crude oil and crude oil only, primarily because you get down a very wormhole. You get down to wormhole chasing. Well, which NGLs are satisfying crude demand and which NGLs are satisfying NGL demand, like plastics.
Yeah, there's people who make careers after that.
That's right. So now let's take a look at how many barrels. My rough calculation is basically for every 4 barrels of crude oil, you'll have 1 barrel of liquids. Do you think that holds water, Bill?
It's close enough for discussion.
Okay. So anyhow, let's take a look at the last 20 years on the production side. We went from 66 to 74, 75. That doesn't seem like a very compelling growth profile. Look at the shape of this. That is much steeper than this. So you can see we had excess periods where we probably had plenty kind of dropped, and these are the economic doldrums of the 80s. And then we recovered, and obviously some blips along the way. We have the COVID blip. But one thing that's interesting, as we were focused on China and India for demand, is let's take a look. The Americas has grown significantly on the supply side. So let's see. Crude demand over the next 10 years. I do, Taylor, not handy. I'll look for it as Bill kind of discusses this, because I think I did have that.
So, Taylor, as far as the forecast for crude demand over the next 10 years, I think we're going to see two things. I think it's going to increase. It's going to increase both in China and India, though China could be not as much as people think. India does pretty strong. The other thing is that we might see on that demand, we might begin to see a little differentiation of the NGLs versus the actual crude oil. We might see a little bit more NGLs because the gas is growing. And so I think what we're going to see is that we're going to, 10 years, barring any major global recession. How's that for a huge quantifier?
What do you classify as huge there?
Well, that's why it's classified and quantified. I think we're going to see probably on average anywhere from a 3 to 5% growth, only because I don't think we can build the infrastructure fast enough to meet a bigger demand like that. I think you'll see some of these countries invest in their own infrastructure, but when it comes to reserves, you're still talking about the Middle East. And strangely enough, the third in reserves is Canada. And they're actually going the opposite direction. So I think demand can go up. And if production doesn't meet it, what that means is the price goes up. So I think we could easily see demand and price start playing a game sometime. I'll go out on a limb here, sometime in the first or second quarter of 2025. It may happen before that, but we could see, we can start seeing it be in 3 digits. The interesting part about that is I'm not sure people are going to mind it being in 3 digits because everything else has gone up. So it's going to be a real tough balance on those economics. So yes, it's going to increase over the next 10 years. When you go out 10 years, shoot, I may not be around by then, so I can make any kind of prediction. So I think you could see it go as high as maybe 125 million barrels a day, maybe between that and 130, just because of infrastructure issues.
Right. And I'm looking for one more thing.
So that's me stepping out on a limb, Taylor. I hope that answers your question, but I see it as a 3 to 5% growth, and you'll see these rises go up. And like I said, we tend to look at things in the U.S. and by who's involved in the administration, but realize that as much as we could double our demand and we still wouldn't reach that level, because we are only 20% of the demand of the global demand, a little bit less than 20%. It's a lot. It's more than we produce.
Yeah.
I think we'll see our demand begin to flatten out, and you really have to look at the demographics of the countries to sort of have a better view of that.
Yeah, and Taylor, I can't find it right now, but I will look for it. If you want to drop me an email, there's an email down below, but it does piggyback off the EIA's projections for demand over the next to 2050. Thanks, Taylor. Yeah, I definitely will look for it. So
I think also you have to realize that when you have an organization predicting demand like the EIA, you have to look at the other things they're predicting as well, because they're predicting a significant increase in battery powered cars. And part of that, you have to realize that transportation is only 25% of crude oil.
Well, and we actually did a live session on the EIA projections to 2050, because when they published that, we took a look, because we really questioned their natural gas curve, the renewables curve, and the crude oil, because crude oil was showing a very large shrink. But when I get back to this one on the Americas and I take a look at this, I really don't see much shrink here. We've been flat since the early 2000s, slightly down. I'd say at most we maybe the Americas maybe contract a couple million barrels a day, but that also plays into some macro things that are happening as far as some reindustrialization that the Americas, Canada, the United States, and Mexico is bringing back from China.
Right.
Basically, 2020 taught a lot of the suppliers that they just can't outsource everything, because now all of a sudden things aren't connected anymore. And Taylor, I think you're right on exports, and but we're probably going to get back to that.
I think the exports has more to do with what we can refine of the U.S. production versus the volume of it, because the new oil that we get in is so lean, our refineries are not set up for it. That's why you're seeing quite a few proposals to build some. I say quite a few. I guess in the last 50 years has been 5, but there's been some proposals for new refineries to be able to refine this lighter oil.
Right.
And so there's some really interesting proposals with that, especially the one in Cushing, Oklahoma. I don't know if it'll ever be built, but that'll be good.
I am gonna address something. Let's say, Vernon, I will get back to that. It is related to weather. Natural gas at 247. Well, let me go ahead and address Vernon's question. We're right at this channel bottom, and for those listening that are not on YouTube, this is live streamed to YouTube, to LinkedIn, and Twitter. So we get questions from each platform. But Vernon, it is down because of some weather forecasts, but some of this is also natural technicals. For our subscribers, we actually just did a video on this, saying that this is really the level to watch, this mid 240 range. If we drop below that, we could see 231. I'd probably defer to James over at Arcus FX for a technical view, but I would project that we're going to come back to this 252 level. So, Vernon,
And
thank you
Vernon,
for.
if you want to hear a good conversation, when Brian and I both talk about fundamentals versus technicals, yeah, we always have a good discussion about it. If you always ever get it, if we ever decide to let you guys get in on it, you'll be able to hear where we go on that.
Yeah. So Vernon, hopefully that answers your questions. We're talking a little bit about crude oil demand, crude oil production, and U.S. exports. Taylor had a great point saying, sounds like U.S. exports will continue to rise. That is if something, and I'm going to point you over to our platform for a second. This is Rogue Edge, only $89 a month. You know I'm going to sneak that little plug in there. But let's take a quick look at crude oil supply, because there's some interesting things happening on the supply side. You got it, Vernon, anytime. So on production, I'm gonna leave this up and show this curve right here on total U.S. production is not a very compelling growth case for production. That is while we've had increasing, let me choose the same time frame, increasing rigs during that same time frame, and we have started tipping this year. So I would say we are not at a level. We're not at a level to where we're going to be able to sustain or continue to grow our production. And I would peg that we're currently, what do we build, 687
Yeah,
on
and folks,
rigs?
when we look at these rigs as a leading indicator. So these wells won't come into production for 60 to 90 days. And so lack of rigs will show, in fact, is on one of our other charts, we already show where we're going to go into where decline is overcoming new production.
And
so
again,
you always have to remember, any well that starts on it, it just naturally declines. And so our decline is overtaking our new production. And so
what this means, this chart is the production decline. So on 12.2 million barrels a day in the United States, we decline over 600,000 barrels a day every month. So if we don't bring on any new production, we'll decline by 600,000 barrels a day. So I'd say U.S. exports will continue to rise if the price supports enough production. And what we're seeing right now is the net changes on a monthly frequency, not a daily or not a weekly frequency. We are starting to tip. This is on the shale basins, and we're starting to see production drop. So, so yes, they will continue to rise. I would say that Bill and I both are going to remain bullish on crude and gas until we get to 800 rigs. So
right, and the other thing is that when you get around $100 a barrel, strange things start to happen. We'll do a whole nother deal on that sometime. But
right.
It has, I mean, I always told Brian that I watch gasoline prices. Whatever, if I go buy a 7-Eleven or something, like, I look at that, how much they rise, how much they fall based on crude oil. And people's behavior begins to change when regular unleaded gets around $4, $4.10, $4.25. People's behavior begins to change because that is hitting them exactly where it hurts, and that's in the cash.
Well, so let's take a look. Diesel is over 4. Let's take a look at regular. Regular is down here. In some sections of the country, it's above. Chicago's, San Francisco,
well, we really can't count California because you got $1 worth of taxes there. And
yeah.
So, you know, that's the part you have to watch out, is what they're adding to it. But it's something I've noticed over the years, and I've been for a long time when I worked for a producer. I drove by the same 7-Eleven, and I could tell what the price of crude oil is based on the price they had posted on their gas pump by the time I got to work. So it was that was my only leading indicator, and it was only a leading indicator of about 15 minutes. So
yeah.
so let's
get
demand.
back.
I think the demand is going to continue on because it's hard to stop this momentum.
Yep.
And I know a lot of people want to say that the renewables are going to have an impact, and they will, and they may already be having an impact, because there may be that this demand would be even steeper without the renewables.
Well,
so Brian and I come from a point, and we'll talk about renewables just 1 second. Brian and I come to a point that we believe that we're more concerned about energy poverty than the type of energy and how it gets there.
Yep.
And so whether it's fossil fuels, renewables, nuclear, however you want to phrase that, people need energy in order to be flourishing. Humans do. And so how we get that energy, if we're looking just for one solution for it all, we won't see it. Go ahead, Brian.
Oh, yeah. Well, the answer is we continue to believe and promote all the above. All the above is the answer. So if I take India off this, you can see Europe on this flat decline. This is what people are projecting in the Americas. And again, this is the OECD definition of Americas and Europe. So you can see that they've reduced by roughly 3 million barrels a day.
But it's also during the time when they deindustrialized.
They deindustrialized, but take a look at this. You add in India, now you're at flat. You add in China, now all of a sudden we're way up off the charts. So the thing is that when we are looking at demand, a lot of people start from the focus of their individual country. So we actually have customers that are international in different countries, some over in Europe, some over in Asia, some over in Africa, and many of our customers in those areas start with the premise of what their country is talking about. And for example, what we hear often in the United States, which is where Bill and I are, we start from, oh, well, oil demand is just going to drop. Well, first off, it's not going to drop it's not going to drop a whole lot. We can learn a lot from Europe's deindustrialization. Yeah, they dropped, but only 3 million barrels a day. I mean, is that significant in the grand scheme of things with 100 million barrels a day of demand?
So I think what we're seeing here is a lot of times if you see a drop in demand in one country, you might see a rise in demand of other, because they have, for lack of a better term, farmed out their industry to another country, increasing their demand for this. So as far as crude oil, I think we're going to see a strong demand for a long time to come. I think the energy transition is not a transition away from oil, but it's a transition to other things that help meet the energy demands and create keep people out of energy poverty.
Yep.
Brian, that's what I've got. What do you got for the rest of the day? Well, we're at 34 minutes, bud.
Yeah, no, I think that's good. If anybody has any questions, we're going to close off in the next 5 minutes, but we will stick around if you got questions. But let's just recap. So when we recap, let's take a look at demand. Demand in the last 20 years grew globally by 1 million barrels a day every year. So even if that moderates to only 500,000 barrels a day, even if that stays flat, we take a look at this production curve in the last 20 years. This does not tell me that we're going to be able to satisfy it with the price deck that we have. So that means that internationally and in the United States, we're really going to have a higher price point to really incentivize production to match this demand growth. Because even if we just stay flat, all this production is going to decline unless we increase mechanical infrastructure to pull it out of the ground. Right, Bill?
Right. And to move it. So the other thing you should look at is there's a few other geologists out there, which is what I always like to listen to for some strange reason. I like listening to geologists who talk about the actual commodity. How much oil do we really have in the ground?
Right.
And when you look at that, we've got enough oil in the ground for quite a ways. Now, incentivizing companies and countries to pull it out of the ground is what the market does.
Yep.
So that's what I've got, Brian. What about? Are we done? Think so?
I think
Have we
that's
solved all the world problems, or one?
I don't think so. But I will say this. Let me leave off with a commercial and how to reach us, and that is our platform, Rogue Edge. We designed this for people in the energy industry, and we've come across a wide array of people that are very fascinated with energy prices, and we aggregate supply, demand, exports, and movements into interactive charts that you can download, that you can interact with to actually view and understand data. So as you go through these charts, you can go through and select certain things such as natural gas. Vernon was asking about natural gas. Well, electric demand is one reason that we've been bearish, is the expectation is it's going to moderate back down. So these are our interactive charts that you can download, and we have over 150 of them. Plus we do a weekly video for our customers where we go in depth on the markets from a fundamental viewpoint, but we touch on price. So if you're interested, there's a way down below to reach out to us, book a meeting if you're curious about it, or you can sign up. It's only $89 a month. So that is my commercial. Did I leave anything out on the commercial side?
No, but we're going to repeat one more time. It's $89 a month, and you only $89 a month, and you have access to that information. And of course, anytime you want to reach out, just reach out to us, book a meeting.
Yep.
We'll be more happy to talk to you. And also, most people don't know we do a little bit of consulting. So if you've got a project coming up and you need a little bit of help, and you can, we're more happy to help you.
Yep. So listen, thank you for watching. Thank you for participating, and your comments. Really appreciate it. If you did like this, please like it, repost it, and comment on it, because it really does help us expand our reach, and we want to make sure that people are aware of things that are happening in the market, and ultimately we see a continuation of demand increasing and supply is moderating. So when we take a look at that forecast, we are going to need higher prices to support natural gas and production on a consumption basis. So when we start with that, I think that's it. And let's see. Oh, that was you on the comment, wasn't it?
That was me.
So listen,
thanks for watching, folks.
Thanks for watching. I hope you have a fantastic rest of the week. Reach out if you got any questions, and I appreciate you stopping in.
Hey, turn those air conditioners up. We need to run this natural gas price up a little bit.
All right. Have a good day. Thanks again for watching.